Hello. Probably 24 hours a day, just going,
yeah. So it's basically been revealed, and I believe now widely acknowledged, that Terra Luna was a glorified Ponzi scheme. You know, the proof in the pudding. You put it up against the chart of BitConnect, and it's basically identical with that. You know, double camel hump, the new all-time high, and then a very prompt crash to zero. This is basically what happens. We had a columnist, Mr. John Hargrave, who writes in our newsletter, the Quantum Economics newsletter, every Friday. And his topic 2 weeks ago was how Terra Luna is basically has no utility. He basically pointed to the only utility of UST being Anchor Protocol's 20% APY, which that's unsustainable in a bull market, and in a bear market, it's just Ponzi-nomics at its finest. And yeah, I think that the entire world is watching, and you know, this isn't, you know, like previous DeFi debacles that we're all kind of like, you know, it's all in the family, and we could kind of laugh it off with a meme and move on. The Terra Luna debacle was immediately commented on by the U.S. Treasury herself, Janet Yellen, and they're pointing the finger, saying, "Yeah, this market needs to be regulated. We need to protect the system from systemic risk and protect investors." So first of all, I want to say for the record that investors don't need her protection. We are dealing with a much more sophisticated, much more intelligent investor than we ever have in the history of the globe. And case in point, people staring at their screens yesterday going, I can buy $1 for 50 cents. I mean, where can you get a deal like that? And they just said nope. It was like a big freaking nope, because people understand the risks that are involved. And I believe that investors understand the risks even better than the regulators these days. And therefore, any sort of attempt to regulate this market is going to have unintended consequences.
yeah,
So, I get a chance to read that.
You said a lot there. I mean, the BitConnect connection, you just rewind 10 days, that would have seemed like sacrilege. It would have seemed like just impossible, in fact, because it seemed so robust, mainly thanks to Do Kwon. But I'm curious, Mark, as someone who's built in DeFi from the get-go, and particularly built an AMM, which is sort of the most basic building block of what drives the Terra Luna burn mechanism. What's your take on this? How have you viewed this catastrophic unwinding of the Terra ecosystem?
Yeah, so I said that there are a couple of things that I want to say straight out of the gates. And that is, like, I'm not, on this call and any other call, I have no interest in rubbing salt into the wounds of the people that have, been devastated by what's happened in the Terra ecosystem. I think that I agree essentially with everything that's just been said there. I have been cautiously warning people against these kind of algorithmic stablecoin models. At Bancor, we have a whitelisting process, and there have been many attempts to get, things like DSD, ESD whitelisted against impermanent loss insurance, for impermanent loss insurance and things like that. And in general, our DAO has always rejected them just because they have a 100% failure rate. And I think that, when it came to the Terra economy, I was, mentioning 6 months ago that I think that it is, it could be catastrophic if it finally fails, just because of how large it got, right? Certainly, this is the largest of the, the stablecoin algorithmic models, and I think we're really starting to see how deep it can cut into the rest of the crypto economy. But I think that it wouldn't be helpful to sort of just stand here and say that anyone could have seen this coming, because clearly people couldn't, right? The Terra ecosystem had thousands of users and a lot of people that sort of fervently believed that this is something that is possible. And I also want to say that I think that the algorithmic stablecoin idea is worth thinking about, right? I think that the ambitions behind it are good. But in this case, the execution is bad, right? And it is relatively trivial to demonstrate that something like, the idea that you can just stake something for more of itself is going to be unsustainable in the long term, especially if it has to maintain a stable price. And so, yeah, I think that for industry experts everywhere, I haven't really met anyone that was ever really convinced that the Terra ecosystem would have a lot of longevity in it. However, I don't think that anyone really saw it ending this abruptly, and with so much drama. And I think that it's beginning to come to light that this might have been an orchestrated attack by either a single wealthy individual or by two hedge funds. But it doesn't matter, right? It comes back to sort of the argument against things like flash loans. If your system is robust and if it works, then these kinds of attacks shouldn't work. And the fact that it did work means that there was something broken in the core component. And it's fairly easy to identify what those things are. And I'm sure that over the coming weeks, we'll have a lot more opinion, sort of analyzing exactly what went wrong. And it's pretty easy to show that that if you have something that the only demand for it is staking returns and there is no other utility, that it's going to end in heartbreak eventually. And it didn't have to be this catastrophic. But it was precipitated in this case, and I think that that's why it is, why we're seeing the charts look like a vertical line to the bottom.
So I think what's interesting in this is that there are two narratives going on simultaneously, and these are price narratives, which is Terra seems to be converging on zero as fast as it possibly can, but UST is kind of, I mean, it's bouncing like a shitcoin, but it's not zero.
Right.
And I think a lot of people will be really having a hard time understanding.
I don't think it is at zero yet either. I mean, things rarely go to zero because there's always somebody willing to pay for it at some price, right?
It's a vigorous speech, but you know what I mean. Like it was at $100 at one point. It was at $100, and people were shorting it at that point. They were very wise and they made a lot of money. But I mean, that's the market. But can you explain, Matty, why it is that the price structures of these two different tokens, which are connected, are so wildly different? The fortunes of them are so very, very different.
Of which two?
Of Terra and of Luna and UST.
Oh, because and this is, we had Paolo Arduino, the CTO of Tether, on. I apologize for the background noise. He was on our spaces earlier today, and he's basically saying, look, I mean, I'm sorry to anybody who actually sold Tether below 95 cents. However, if anybody wants to buy to sell Tether to us, we'll always give you $1 for it, and we have the assets to back that. And this is basically the difference between an asset-backed stablecoin and algorithmic stablecoin, because they can always redeem it one for one to the issuer, and get their money back, and that basically instills confidence in the market. Where the problem is, with when something loses its peg, or what usually happens when a peg is lost in a stablecoin, is you have arbitrage traders who come in immediately and see the opportunity, right? Like, you can buy $1 for 98 cents. You're going to do that immediately, and the price is going to go back up to $1. If it's at $1.02, you're going to short it, and the price is going to go back to $1. But that only works if the market has confidence that it's going to be worth $1 again. In the case of Terra, it was quite clear that the market just lost confidence in its ability to maintain the peg, and therefore it made it harder for the LFG to actually enforce that peg, because the arbitrage traders were not on their side. I was out there personally yesterday morning. I bought $100 worth of Terra because I wanted it to succeed, and I wanted to be part of it, regaining the peg if that ever happened. But it was very clear that the market was not willing to take those type of risks, anyways.
So we're basically seeing, I brought up the chart here, the issuance of a staggering amount of Luna. So as UST is redeemed for $1 worth of Luna, it just collapses the price, and the the issuance just goes up through the roof. And so you can see here, like this massive spike in the issuance up to kind of 1.46 billion. I think it's worse now. Look, we can see the prices, you know, heading down towards 1 cent and, you know, sub 1 cent. This is extraordinary.
Yeah.
Mark, I mean,
they go to from $100 to 1 penny
So,
that quickly. That's new.
well, it's new for something of this scale. It very closely resembles a stablecoin project, I think on Polygon, called Titan Finance, which had exactly the same kind of bank running flaw that was built into its algorithm, which is as long as you can always perform that arbitrage, right, by claiming $1 for less than $1, its fate is sealed, right? Once that flywheel starts to spin up, it gains momentum very, very quickly. So yeah, it's not, it's new for something that is, potentially, impactful for the entire industry and affecting so many people. But, I think that we've seen exactly that same, runaway effect play out in every single algorithmic stablecoin project today. We saw it with ESD and DSD, although not as dramatic. We saw it with Titan Finance, and I think even some of the early, the early algorithmic stablecoin projects. I think even Do Kwon is even now being, things like Basis Cash are being attributed to Do Kwon now.
I was just going to bring that up. I was just.
Right.
It's not.
So this is like,
I don't think it's going to be the last either.
Yeah, well, maybe, yeah. But the point that I'm making is that you shouldn't be repeating the same experiment with the same conditions over and over again, expecting a different result. If it broke dozens of times before, it's going to break again if you don't change anything. And I don't see anything profoundly different about the way that the Terra ecosystem was set up that would have given anyone who knew why these previous projects failed any confidence that it wouldn't fail again this time.
So the interesting thing is, Matty, you brought up Tether. Tether historically has a terrible reputation. There are attestation reports as to what's in the treasury, but I mean, they're the dodgiest things you've ever read. You had Paolo up there. What is the sense that you got, that the commercial paper that used to be in the treasury, that they've reduced that? Do you get the sense that they're a cleaner outfit now? Because there's no doubt they were up to some stuff, and they have cleaned up their app because they had to. But is it fully clean? Do you get the feeling that they are?
Well, I mean, it's not for me to say, honestly. I mean, he's definitely portrayed a lot of confidence to us this morning. But the market was also at that very time, I mean, the market was displaying a very clear lack of confidence. I mean, we saw Tether down at 95 cents, and we saw at simultaneously, and I was thinking that, this might be like we've shaken to the core, this kind of idea that stable coins can be pegged all to the dollar. And what happened was we actually saw people leaving Tether, and they were favoring maybe a bit of Bitcoin, because that's when the bottom came in. Maybe people were taking that Tether out and saying, okay, well, Bitcoin's cheap right now, and buying the Bitcoin bottom. But more, what we saw was a flight to other stable coins. So USDC went up to $1.05. BUSD was $1.05. DAI was at $1.04. So we could see that they were fleeing from Tether into the other stable coins. But it's not necessarily good for USDC that it's at $1.05, right? It's supposed to be $1, and if it's not $1, you've got a problem. While he was speaking to us, it became clear that the market was stabilizing somewhat, and within a very short period of time, Tether was back up at 98 cents, not quite $1, but then the other ones came back down to $1.01, and all had been restored. And I think it's very similar to what happened back in the day. I remember the first time Tether lost its peg, and then the arbitrage traders came in within like 15 minutes and bought it up. They're like, yeah, I'll buy $1 for 85 cents. And then, and in that case, since then, I mean, the peg on Tether has been pretty much solid. until today. So there is a case of whatever doesn't kill you makes you stronger. I think that's really what we saw today. As long as we can maintain that that dollar peg throughout the day, throughout the week, see some sort of a bottom come in. I think that's going to instill confidence long term in the market.
Well, you keep using this word confidence, Mark. I'll let you go ahead, but the word confidence, it inspires confidence, but you can also have confidence tricksters, and I think maybe a lot of what we've been seeing is exactly that. But Mark, go ahead. What were you going to say?
Yeah, I just wanted to point out that there is a deep chasm between the type of bank run event that you can see happening in the Terra ecosystem that's happened in a lot of the other algo stables, and something that could happen in USDT. And the reason is that the only entity that is allowed to redeem USDT for the assets backing it is Bitfinex. So users, right, like when we were speaking about the arbitrage traders before, they are really, it's a speculative arbitrage trade. They're basically trusting that Bitfinex is going to restore the peg, and then that's when they can realize that arbitrage. But they aren't allowed to go to Bitfinex's accounts and exchange one USDT for $1. That's actually bottlenecked by Bitfinex, and this means that the market isn't capable of really bank running USDT in any in any sort of precipitous way, and that mechanism is it's a lot less decentralized. It's a lot less trustless. And if you have faith that the guys in charge of Bitfinex don't want to go to jail, then you can be confident that it will be okay. Now, that's not always a good assumption in cryptocurrency. We know that we're talking about Terra. So Do Kwon has been under investigation by the SEC for securities fraud for a long time, and I think he's failed to show up for court appearances. It seems like some of the people running cryptocurrency really do think that they are invulnerable.
Well, we don't even know if Do Kwon is his real name. I've never seen a copy of his passport, anyways. But to your point, and I want to just add another layer here to what you're saying, because the Bitfinex is actually the last resort, right, for to
exactly.
maintain. However, I don't think that the short-term arbitrage traders are necessarily counting on Bitfinex to maintain the peg as much as they're counting on the rest of the market to maintain the peg. So if they're saying, okay, I'm buying it at 98 cents now, the rest of the market is going to bring it to $1, and you don't have to see those redemptions. Also, there's a minimum of $100,000 to redeem Tether. I mean, Paolo confirmed that for us today. So it's not for the small fries, and I think the small fries are on Binance and the rest. Those are the ones who are actually enforcing the peg really in real time. I tried to get that from him today. I didn't really even understand the question, but basically, it's in my mind, it's not Tether's assets that are maintaining the peg as much as is the market psychology. It's the same market psychology that connects the fiat dollar and stabilizes it at a value of $1. Why is a dollar worth $1? Because we think it's worth $1, because everybody else thinks it's worth $1. We all share that same imagination that $1 is worth $1, and that's why we're confident that it'll continue to maintain that value. And I think that's the same thing with USDC, the same thing with USDT. What happened with Luna yesterday was people were not confident that it was worth $1, and the arbitrage traders were not willing to step in and buy $1 for 50 cents, which first of all I think says a lot about the sophistication of investors today, right? Which is a fair bit better than even what the regulators are. The regulators we need to protect investors. Like, no, we don't need to protect investors. Investors are smarter than you. Thank you very much. But the underlying fact is that or what happened this morning anyways was people were going, well, wait a second, if Luna's peg can come out, well maybe Tether's peg can come off as well. And I was thinking maybe they might be going after USDC, BUSD and the whole market, but actually it was only some old Tether FUD resurfacing. Maybe people saw it at 98 cents, which is it happens sometimes that it goes to 98 cents before arbitrage traders step in and iron it out. And then at 98 cents, I had journalists DMing me and be like, are we losing the peg? Like, no, that's ridiculous. 98 cents. What's the problem? And then I see all kind of people going, oh my gosh, it's 98 cents. And then people started to sell it. They got it all the way down to 95 before the big boys stepped in and go, yeah, I'll buy that.
Yeah. So yeah, I agree. I agree with everything you're saying in general. The USDT one that we saw just today is slightly more nuanced because someone, fat fingered a $520 million sale of USDT, and that was at something like a 400% premium. And we may never know why that individual chose to act that way. It could have been that they thought that they could throw USDT off peg by themselves and create another market spiral down. But really, as we pointed out, Tether is managing to come back. I think Tether will be fine. It was interesting, right, to see this one transaction panic sell very, very quickly, and I think that was kind of the beginning of Tether being off peg for a little bit. So it wasn't just kind of the market reacting. That one was also precipitated by a single individual.
Yeah, there was panic. There was blood. And I'm just watching this Luna price right now, and it's like 0.008.
Oh, it's under a cent now.
My brain.
So with 100 or what is it, $1,000 right now, buy all the Luna in circulation. But it's I want to do the calculation. What's it going to be? $5,000? You buy all the Luna.
This is a live stream, right?
This is a live stream.
Yeah. For anyone who's watching right now, I just want to quickly remind everyone that sometimes, when markets are really uncertain like this, and you don't know what to do, the most educated decision is often to do nothing. And because I've seen a lot of very unhelpful, very high speculation advice circulating on crypto Twitter that I think is going to, is very destructive. And so, when you see people saying that this is the buying opportunity of a lifetime, or, whatever the advice happens to be, don't feel like you have to act, right? If you don't have a Luna position and you're not looking to pick one up, don't treat this as being sort of a golden ticket or something like that. Just do nothing is the best decision often that you can make.
It's one of those things, isn't it? If you know what to do and you have the parameters, then it's great. If you don't, and I know so many people who got wrecked yesterday because they thought Luna was so cheap, it was dumb not to buy it. And I think
exactly.
the proof is in the very, very flat and tepid, sopping wet pudding that we have in front of us. Now, listen, we talked about confidence a lot, and I want to take you back to March last year, March 2021, when we basically saw the blow off top on the altcoin and Bitcoin markets, and that precipitated another depegging of UST. In that moment, I believe UST went down to 86 cents, which was catastrophic at the time. It was seen as the puncturing of the bubble around Terra and everything it had achieved up to that point. What happened next was the system basically worked and brought the peg back. And now it took a while. I think it took about a month for it to get back there, but it did work. And I think that was the moment that Do Kwon turned into a genuine, honest-to-goodness asshole, because it gave him the confidence to believe that he was God. And you can see it in his tweets. He was quite reasonable up until that point. After that point, because he was under attack, he called people cockroaches. He saw that in order to kind of respond, he needed to elevate himself to godlike status. And it's his hubris that has probably brought on the savagery of what it seems to have been was an attack. And I think it's important to kind of really outline what this looks like. By my hand, DAI will die. The whole fall pool situation, probably the most retarded thread I've seen this decade. Silence is a perfectly acceptable option. If stupid billionaires in my following, go ahead, see what happens. I mean, come on. I don't debate the poor on Twitter, and sorry, I don't have any change on me for her at the moment. It goes on and on and on. Those of you waiting for the earth to become unstable, I'm afraid you'd be waiting until the age of men expires. I mean, he picked a fight.
I want to comment on some of this behavior, by the way.
Yeah.
Because, for a lot of last year, we've seen sort of these crypto personalities rise up that have these kinds of traits, right? And I think that, you know, if there was a distinct change in Do Kwon's behavior, you could be right? He could have considered himself invulnerable now, or he might have been emulating, you know, people like Danielle, right? Or, you know, Andre Cronje can get cocky at times as well. You know, and what's interesting is that even at, you know, at Bancor, sometimes my community members want me to be more like these people, right? Because they think it's good for the project. And I will never, I will never do that. It's just not in my, you know, substance to do that kind of stuff. But it could be that Do Kwon thought that if you are, you know, pushing this kind of, you know, narrative and building an image for yourself as being someone that's so confident and has all of this, you know, I don't know what he thinks it is. Maybe he thinks it's charisma or something else. But the fact of the matter is that people do rally to that, right? And we've seen, you know, you see this in politics as well. It's why, you know, some people get elected to office that maybe shouldn't have been, just because they're popular and people think that they know what they're talking about.
Yeah, the matter of that word of confidence, and you know, he was maybe you're right. He was trying to display confidence. I certainly wouldn't try and justify his behavior or something like that.
I'm not justifying it at all. I'm just remarking that he may not have believed it, but you know, he could have had, you know, his investors saying, "I want you to behave this way because it's great for the token price." And in general, that's true.
Well, let's make a distinction between speculators and investors, because on the side of Terra, you do have some serious heavy-hitting investors who've had their asses handed to them fairly publicly and in a pretty unpleasant way. Names that spring to mind: Jump, Delphi Digital.
Yeah.
Like Delphi Digital, they're smart kids, you know. They're not idiots.
Did you see Novigratz's tattoo?
I mean, come on, dude. Yeah.
The big one with Luna right on his arm. That
right,
you delete a tweet, but you can't delete a tattoo, man. That was that's embarrassing.
Yeah, no, they're gonna have to eat that because, you know, they made a bet and the bet was wrong. But like, it's not like we haven't ever seen this story play out again and again and again and again and again. You know, you look at WeWork, the SoftBank, right. Some of the smartest investors around got completely taken for a ride by that dude.
Everyone recall the smartest people in the room,
right? Like you know, several of those stocks that were doing so great, you know, just a few months ago are now down 90% as well.
Yeah.
It's brutal.
We were at a place in the market where euphoria had firmly taken over, and you know, that I believe we can, you know, if we want to place fault, I think we can blame the Fed and their you know, unencumbered money printing, where they were just like, you know,
well, they blame COVID.
They handed out money like it was candy, and you know, anybody can kind of make money in a bull market like that. Now that they're taking it away, I mean, things are crashing. You know, so if you want to find fault, I think that's, you know, you got to look at the lender of last resort here, the one who's in charge of all of the dollars in circulation.
Well, that's a fair point, and that brings us very neatly full circle back to what Mark was saying, which was the need for an algorithmic stablecoin is there, but it's just we haven't found the solution yet. Let's see if we can hear from Do himself. Let me know if this doesn't come through.
I wonder how many of these companies you think are entering the space just because it's hot and there's a lot of funding versus the ones that will still be here, you know, like 2 to 5 years later.
95% are going to die.
Yeah.
95% are going to die. Yeah. But yeah, there's also entertainment in watching companies die too.
There's entertainment. Oh man, that's so evil. At least you get to learn from it, right?
Well, that's the question. Did he learn from it? And is it entertaining for Do Kwon right now? I mean, yikes.
It's even more ironic if he is responsible for basis cash, right? Because this is already his second round.
I mean, this keeps happening, right? The Azuki founder, I don't know if you followed that story. Like,
yeah,
the whole thing happened at the same time. There's like, people just get away with murder, and there are going to be so many instances of projects where they get away, and we never know. So I want to come back to this idea of the charismatic leader, because this is effectively cult behavior, and we should entirely label it as it is. It is mind control. It is taking people and mind fucking them into believing a certain reality because that's the best thing for you. And you see this brigading and kind of herd mentality as people kind of huddle together and they get really defensive. And you saw Do himself getting really, really defensive, and his fans, the lunatics as they're called, rally behind him and like, yeah, he's fighting for us, he's one of us, which couldn't be further from the truth. And as you rightly said, Matty, this is Trump. This is pure Trump, the whole thing. What I found fascinating is, as you said, Margaret, it's not the only one. I mean, I often look at Charles Hoskinson as a prime example of this. One of the strangest humans. You've just broken my entire train of thought here, Matty. Can't do that. Can't just bring kids into this. What if I say something bad?
This is my junior analyst. He's my assistant. He started calling up my business partners exactly at the right time and handing me the phone. He's been doing a great job.
I honestly believe that if you got him to scribble down a formula for a stablecoin right now, we could get it funded. So anyway, I was just about to bring up some more wonderful human beings. Nayib Bukele saying El Salvador just bought the dip. He was tweeting like he was some kind of retail altcoin influencer. I mean, wow. And then just below him, Justin Sun chimed in as only he can. We have echoed Nayib Bukele's voice and purchased 500 BTC with average price. So, I mean, Justin has also been releasing his USDD, which is basically built on the same Ponzonomics as Terra. And he's offering 30% of return. 30%. That's only going to end well, isn't it? And just doing more theatrics in the public market. What else did he say? The range from over 100%
here. Somewhat. I hope that Justin Sun will have at least be able to read the room, because he is pretty good at reading the room, and maybe temper those plans a bit.
Well, I tell you what, Justin's really good at. He's very good at leaving the room. So when the room gets too hot, he just goes somewhere else. And he's now His Excellency. So I think we should all just like take a moment and give him his fair due, His Excellency. What else do we have? Oh my gosh, it just goes on and on and on. Well done, he says to the Tron DAO Reserve, to safeguard the overall blockchain industry and crypto market. You see how he's taking on the responsibility for the entire market. The Tron DAO Reserve have now bought 1,000 BTC. Well done, Tron DAO Reserve.
I think that Nayib, anyways, I mean, he's always acted like a kind of a crypto influencer. But you know what? I don't think that he's making the wrong moves necessarily. I mean, he is taking a gamble, but I think it's a calculated risk for his country. The fact that he's gone to the Bitcoin system and embraced Bitcoin as kind of national currency somewhat. I think that he kind of needs to play that out until the end and build up the Bitcoin reserves. And it's certainly better to build up those reserves when the market is down 60% than it is when the market is at the top.
Yeah, I don't disagree with you there. I was just trying to scroll through and find the Charles Hoskinson tweet where he kind of outed BlackRock and Citadel for being basically responsible for the major action in all of this.
It was a weird tweet. I read that one because he made it the way Charles Hoskinson worded it. It sounded like he was kind of privy to sort of information that only insiders would have or something. But by that time, it was already sort of well circulated information on Twitter. I just thought it was strange. It was like a slow reveal of something that everyone already knew.
It was. I mean, well, for those who haven't read it, let me see if I can bring it up here. I can't make it any bigger. Maybe I can. Yeah, but it basically says
I'm not up on Charles Hoskinson's writing. I don't usually read what he writes.
You're missing out. It's full of beautiful anecdotes about walking. And
look, I've been attacked by the Cardano community even recently. But
if you haven't been attacked by them, you haven't lived. You really.
What did you do? What did you do to provoke the Cardano community?
Obviously, after the Link Marines and the XRP army and blah blah blah. But no. Like, and I've clarified it in the QE newsletter. Look, I mean, I don't have anything against Cardano. I hope it succeeds. However, I've never had call to use it. I never had a reason to use it. I've never met anybody who's building on it. I've never, advised a project who wants to use Cardano. I don't have any kind of Cardano NFTs or widgets or Web3 applications that are using it. It could be that it's the best system out there, but until I have actually some sort of a utility, I'm not going to use it and I'm not going to buy any.
Yes. Well, I mean, yeah. Can you say peer reviewed? Well, I can. And I think we're done. So here's the message. It says BlackRock and Citadel borrowed 100,000 BTC from Gemini. It appears in their loan book. Gemini then came out with a tweet and said, no, we didn't. It wasn't us. It wasn't me. I mean, something's going on, right? It's like the whole crypto market is collapsing into something. Anyway, I mean, I think, both of you have been around quite a long time and have seen this kind of cycle, this period of the cycle happen many, many times over. How are you viewing it this time? Is it any different? Because I think a lot of people have been saying this time it's different, even though we know it is never different. It's always the same. And actually, if you know it's the same, it's much easier to prepare for it. Thinking it's different is a much more difficult position to put yourself in.
I think it's just
and we lost
right now. Yeah, I think that, I've seen some of this commentary on Twitter as well, right? That's basically seconding what you said. And that's that, you can blame a lot of the cryptocurrency crashes on precisely this type of market manipulation. It's one of the reasons why crypto is so attractive, to some of the private market makers, is because you can actually get away with things that would be a jailable offense in traditional markets. And so, it could be that every time there's a cycle bottom in Bitcoin, that was orchestrated. I'm not asserting that that's true. I'm just saying that it could be true. And in this particular case, I think that it was just a much more vulnerable target and probably more lucrative in the long run. I think I'm familiar with that analysis, right, where there was the 100K Bitcoin loan, and then with the creation of the fall pool for UST, when Terra removed some of the liquidity from Curve leading up to the fall pool creation, that's when the liquidity was lowest, and that's when the attack began. And it looks like that the total profits for this short position, what is it, effectively just a short position on Bitcoin, ultimately probably netted somewhere in the vicinity of $800 million. So it's probably one of the most profitable, orchestrated, deliberate attacks on a cryptocurrency, but it's not the first of its kind. And probably a lot of the previous bear markets, or at least some of the really deep capitulations, have been caused by this kind of behavior. If not all of them, then the majority of them wouldn't be surprising. Yeah,
I mean, at some point, the confidence in the market is so shattered that these things can happen very quickly. And what's, I think, interesting about this one is it's the presence of a new breed of shark. Although, of course, it's a more traditional shark, but like in this space, we tend to think of like SBF as like the apex predator in crypto. But now we get a Ken Griffin coming in, and you realize that there's an apex predator above the apex predator who can conjure up $1 billion and do some damage. And like that's serious. And everyone's saying, oh shit, now we have to reset to this reality. But that is where we are. And I think there's always a VC narrative in there somewhere, but the VC narrative has been pretty strong over the last 18 months because the VC's been hoovering up governance tokens and taking massive outsized positions in protocols and basically just taking everything away. You launched Bancor before any of that was around. So how have you managed to keep Bancor relevant and in the conversation when that's going on? Because everyone's just like, oh, I need to find the next thing and the next thing and the next thing, because you've kept building, you've kept delivering, and version 3 is here with us now. But like, it's got to have been tough for you guys, I think.
Yeah, for sure. So governance hacks is something that we are permanently paranoid about. I would say that of the major DAOs, ours is it's among the most active, and also the one that probably takes its responsibility the most seriously. So there are things that I think that aren't common knowledge about how Bank or DAO operates. For one, we have an extremely high quorum requirement. So for most proposals, it's something like 40% of voters need to be present for that vote in order to qualify. And anything less than that means that the vote is illegitimate. The other thing is supermajority requirements. So we have like a 66% supermajority requirement, I think, as the lowest. But for some proposals, we require things like an 85% supermajority. And so this makes it very difficult for a single high net worth individual to puppet the DAO, if you like, for their own personal gains. But we can also see these things coming a very long way away. So unlike, for example, the exploit that happened on Beanstalk, if I'm remembering the project name correctly, just recently, which was a you're familiar with it, right? It was a DAO exploit, and all of those. The reason why that exploit was possible is because all of those proposals are executed on chain. The Bank or DAO, it proposes things, and it's kind of the responsibility of the contributors to bring those things to fruition. But it also means that we have this period where it's very, very easy if someone passed something malicious, that before it's executed, you can potentially bring a second vote to the table that is in opposition to the first one, right? If you want something to be retracted, then the Bank or DAO has that capacity. So it's set up to be something that is very, very resistant to attack. Of course, we can't be complacent just because we put these kinds of features in place to protect our governance from malicious actors. Doesn't mean someone's going to figure out a clever way to do it anyway. But we're constantly improving. I think that the most controversial thing that we've ever done was moving all of our voting to Snapshot, which is an off-chain server that basically has signing only. So it allows for gas-free voting, which is an extremely important component of our governance if you're still on Ethereum. But other than that, I think that everything else that we've done has only been to strengthen our system and make it more resistant to these kinds of governance attacks.
Yeah, I mean, Matty was alluding earlier to Janet Yellen, who seems to be very up to speed and up to date with DeFi, and there seems to be a very concerted effort in the US government to try and understand these things so they can put forward what they call safeguards. But I mean, from your point of view, how close an eye are you keeping on these regulations, and how difficult is it to kind of figure out how to comply if compliance is needed?
Yeah, we're extremely close to a lot of what's happening on the compliance side. So, Bancor was originally set up not as DeFi, right? There wasn't even a word to describe DeFi when Bancor was first launched.
You ICO, right? It was 2017.
Yeah, exactly right. Yeah, that's right. And so it was just an exchange. It wasn't special because it's on Ethereum or anything else. It was just a regular exchange. And so we've been very close to the Bancor protocol is supported by the Bancor Foundation, which is a Swiss nonprofit. And it is, we're very well connected with FINMA, which is the Swiss regulator. And, we cooperate with them very, very closely to make sure that they understand, what the protocol is and what DAOs are and what they do, but also so that we understand what their expectations are. And so we have always been regulatory compliant. We have a very strong legal team, both in Switzerland and the United States. And, we don't allow the DAO, for example, to pass policies that would result in, accusations of financial crimes or something like that. So, we do pay attention to regulation, and we are an active part of the regulation conversation, at least in Switzerland.
I don't envy you. I don't have you. I've talked to so many different people who are like, well, if they let us know what we need to do to be compliant, then we'll be there. But like,
the thing is, I think that it depends on your jurisdiction. So I would say that the United States has been, let's say, less than forthcoming with what their expectations are. I think we're all kind of patiently waiting for the SEC to produce some guidelines for how DeFi should be run. But that's not true everywhere in the world, right? In Australia, where I live, it seems pretty clear what the Australian government's position is. Places like Singapore, it's not a universal fact that governments are anti-cryptocurrency or anti-DeFi. It seems, in my opinion, to be a pretty United States exclusive, trait at the moment.
Point of view. Yeah, well, USA rules the world. Where they go, everyone else follows.
I've said this before, and I want to say it again. The US has always been the innovation leader of the world, right? It's like one of the most important, it's one of the most important facets of their economy. And I really don't think that the United States would ever let something as big as, the blockchain industry and what DeFi is doing sort of pass them by. I think what the SEC is doing and what the other regulators inside the United States financial system are doing is they want to remind everyone who's in charge, and I think that that's important. But I think at the end of the day, they are interested. I think that there's DeFi has proven what its value proposition really is. The United Kingdom, for example, has seen in DeFi an opportunity to win back some of its financial markets from Bermuda after Brexit. There is a huge amount of potential here, and all of the world governments are paying attention, and I'm sure the US government is paying attention. And I don't think that they want to destroy it. We've got to stop treating these kind of regulatory discussions as being something like what they're trying to take from us. In my experience, a lot of these regulation discussions are really more cooperative. I think that it's about meeting each other halfway. I think that there should be certain checks and balances in place. I think that if anything, the Terra ecosystem has demonstrated that better than anyone. But you don't have to concede everything. It's not about regressing back to the system that DeFi is standing in protest of. You can have something in between, and I don't necessarily think that we need to be. I don't see it as an ultimatum between regulation and no regulation. I think that there is a happy middle ground where everyone gets what they want.
Well, such a thing means that nobody gets everything they want. You just get some of what you want.
It doesn't have to be a compromise. It doesn't have to be a compromise. For example, I don't necessarily agree that things like privacy need to be conceded for everyone. I think that for certain classes of assets, something like KYC is going to be necessary. So, for example, if you're trading very large insurance futures or something like that, or other kinds of insurance investment vehicles, it's really important to know who you're dealing with. But for things like Bitcoin and Ethereum trading and buying meme coins, I don't think regulators really care that much about KYCing those types of individuals. But maybe setting up a project, just because of the large involvement now from criminal organizations, maybe something like a KYC compliance on that side is not such a bad thing. And even then, I would say that the communities would also like that. In general, being a doxed team is seen as a massive positive. If you're dealing with an anonymous DeFi team, you have no idea, what they're going to do, or if they make off with your money, if you're ever going to be able to get it back again. So, coming back to the point that was made earlier about having an extremely intelligent investor group now, most of these investors are demanding teams to dox themselves before that they will put their money on the line. And so I think that is the sort of middle ground that really everyone in the industry would probably agree to. And as long as users, don't have to KYC themselves, but project founders do, I don't see that as being necessarily a terrible thing. And I think that beyond that, I doubt that many regulators would have much more to say afterwards.
Yeah, it's a tough one. You go back to the Gav Wood Web3 original blog post, and it came off the back of Cambridge Analytica and so much mistrust in large organizations to preserve the sanctity of our data. And you read it back, and it feels sort of almost naive in a way, but he's saying, you know, big institutions cannot be trusted with our data, so we should not give it to them. And this is Web3. And now it's like, well, yeah, that's impossible. So what is Web3? In fact, it's Web 2.5. And Web3 might be an entirely different thing altogether that only our kids will know. And it looks like Matty's kid is still there. Let's see if we can get him back. We lost you there for a little bit, my friend.
Can you hear me now?
Yeah, we can hear you now.
Oh my gosh, my internet crapped out and it was just like
did.
back. I apologize about that.
It did. I wanted to wrap up the stream by kind of spitballing a little bit around how Terra or UST might recover from this and what they could possibly do. Maybe it's a technical thing.
No, man, it was a Ponzi scheme and it blew up. What are you talking about? It's not going to recover. How could it recover? It's Luna is worth one cent. I mean, you could probably redeem all the Luna right now for 5,000 UST. There's no recovery from this. It blew up. People realized it for the Ponzi scheme that it is. It's over and done. Let's move on to the next thing.
I'm with Matty on this one. None of the algo stablecoins that have been through this have ever recovered, and if Terra did, it would be the exception. But until then, we should assume that it's business as usual.
If the LFG still has Bitcoin in their reserves, they should.
They don't.
It to investors. Give it back.
I think the LFG is already drained. Yeah.
Yeah. I mean, it's a sad issue tale. You brought up Doe being brought up on charges. Do you remember it was? Which conference was it? He turned up in New York, and they basically doorstepped him and said, "Mate, you need to answer this." And then I think it was Ryan Selkis got really annoyed on Twitter and said, "I'm going to run for Congress just to prove you bastards wrong." I just think there was a lot of stuff that people said that they'll be looking back on, or a lot of tattoos that they got, just going, "Oh fuck."
It won't be the first time somebody regretted a tattoo, that's for sure.
No. I mean, yeah.
Look, for what it's worth, I'm very happy that Tether managed to maintain regain its peg today, and that the rest of the stable coins, because there's a lot riding on that. I mean, there are so many startups and companies that are built on the precept that a stablecoin can maintain a peg to the US dollar. And if we don't have and if we don't have that, I mean, there basically is no DeFi market whatsoever. So that could be like catastrophic. I'm happy that worked.
Well, do you know who I think the big winner in all of this is? It's DAI. Because Doe just came out flat out and said, "By my hand, DAI will die," and it didn't. In fact, quite the opposite. Let me see if I can find. There was a tweet thread from, I think it was Galileo Capital. Am I remembering that correct? I mean, it's the strangest tweet thread I've ever read. Basically, sort of saying that we have brought down Agamemnon and the false god, and we are. Yeah, it's Galileo Capital. I mean, let me just bring this up. This is nuts. The sacking of crypto Carthage. We're here today at the end of a lunar era. I've said that Carthage must be destroyed, and so it has come to pass. And then they go on and honor Lorishin and Bankless to our former enemies, the Carthaginians. Last but not least, stablecoin, even you are free to return to Rome, Rome being Ethereum. But I think you will find the citizens here inhospitable. Probably best for you to take what remaining treasure you can carry in both hands and go into exile. Now that Rome has won, we as the victors get to write history. So this has all the hallmarks of ETH Maxis defending DAI, which was, their principal brilliant stablecoin.
My BS meter is just like going off the charts.
Oh, 100%. This is just like one piece of BS and story world building versus another. Everyone's just swallowed their own BS. I don't know. Mark, what is the predominant stablecoin on Bancor? Which sees the most volume?
We use three of them. We basically have the same three as the three pool on Curve.
Oh,
so
yeah.
USDC, USDT, and DAI. You know, it would still be my preference to have a slightly smaller liquidity for USDT, but it's not something that I ever insist on. I think that USDC is probably okay. It's interesting, right? Because if you have a look at, you know, again, coming back to Maddie's, you know, discussion about confidence, it's really reputation in these two instances, right? Do you trust Bitfinex or do you trust Circle? Because if you actually have a look at the books, both USDC and USDT are both collateralized predominantly by corporate debt, right? They're very, very similar. They don't have a lot of cash backing. But it's interesting because I've also been discussing with Paxos, you know, about them entering into the DeFi sphere in a little bit more of a profound way. Because USDP is like 99% cash backed. It's probably the most you know, the most trustworthy dollar that we have. You know, they don't just have attestations; they've got full audits. You know, discussing.
It's worth mentioning BUSD as well, because BUSD is built on
Same thing.
Paxos, and it's regulated
It's
in
the
New
same
York.
thing, yeah.
You never hear about it, but actually BUSD is, despite being Binance, is actually legit.
Yeah, exactly. It's actually a Paxos dollar. And so yeah, these are phenomenal stablecoins, and it's not clear to me why DeFi hasn't adopted them en masse. I have a feeling it's because their issuance is so inflexible, right? One of the problems with having something that's 100% cash backed is that you can't produce it very quickly. Yeah. Whereas if you're issuing debt, it's much easier to respond quickly. So, you know, I think that we should. We should see.
You know this.
I've never heard of this one before, but everybody. It seems now that Luna blew up, everybody wants to find the next one, and Frax keeps coming up. We're gonna have to look into that one a little bit. But I want to leave you with a thought, which is that you know, the U.S. central bank, the Federal Reserve, do not seem in any sort of hurry to release any sort of centralized central bank digital currency. And in fact, and this is something that I've been advocating for a while, that they should let the private sector lead on this. And I believe that's what's really happening with Circle and with Paxos, is that United States is saying, you know, go ahead and do that, because USDC is actually going to replace the US dollar proper, because, you know, we have to digitize the dollar. And I don't think it's good to do it in a centralized way. And this is really pretty awesome because, you know, 10 years, 20 years from now, if you say, okay, you know, I'll pay you $20 for that, you actually be able to pull out your wallet, and then your wallet will be able to do it digitally, and the wallet will recognize the difference between you know, $1 from one issuer versus another. There's no practical reason why a dollar issued at Wells Fargo should be worth the same as a dollar issued at JP Morgan. They're two different financial institutions, yet they both have the same value. And this is a problem of contagion, and stablecoins will end up healing that problem, because every single dollar in circulation will be directly accountable back all the way back to the point of issuance. You'll be able to see, where did that dollar come from? If Wells Fargo goes under because their books are gone, it's not going to collapse the whole system. It'll also get rid of too big to fail. This is a really good thing at the end of the day. I think we're going towards a beautiful place economically.
Well, it's amazing that you ended on too big to fail, because I think Luna and Terra gave every appearance of being too big to fail. Hence all the comparisons to Lehman Brothers, because once you get arrogant and complacent, shit goes bad. And this is exactly what has happened. Well, thanks so much to my guests, Mark and Matty, for joining me on the stream today. If you are suffering from the market conditions, as Mark said, take a break, and our thoughts are with you. Stay strong. We've seen this before, and inevitably it does recover. The market cycle is the market cycle. From us at the Defiant, thank you so much. Have a wonderful weekend, and we will see you next week for more of the same. Adios.
Thank you.